What are fundamentals as the Robinhood craze is now moving stocks everywhere? It's cap time, where we identify which way the wind is blowing and which way the capital is flowing. With that said, let's get started. Dirt cheap, automated on apps and championed by newbie traders who brandish their broker balances on Twitter. The stuck-at-home trading phenomenon born in the USA has become a global craze. Yep. Since about March, April, since about the same time that we started going through these lockdowns here in America and across the world, people have been stuck at home and with nothing better to do than just to gamble in the stock market, it would seem. So it says here, retail's tentacles are everywhere. In the UK, tax-free savings account openings at Interactive Investors jumped 238%. For investors between 25 and 34 years of age in April and May. In India, newly minted day traders are crowing after falling in love with stocks that trade below 7 US cents apiece. Small-time traders in Moscow bought almost twice as many Russian shares in June than in April. In Malaysia, individual buyers are at least partially behind giant rallies in medical glove makers. One gained more than 1,600% this year. So you guys get the idea. This is happening all across the world. It's not just in the U.S. With savings accounts paying out nearly nothing and people finding extra time while working from home, amateur investors who have gotten a taste of the stock market may become a permanent feature. The trend is being fueled by zero-fee trading apps like Robinhood that have not just simplified day trading, but gamified it. Relentless support of global central banks has also buoyed equity markets despite the worst economic fundamentals and living memories. You know, a lot of people don't talk about this, but a large portion of the stimulus check money that was given out here in the U.S. actually went towards the stock market. Since March and April, we've actually seen a very large rise. We've seen this bull market kind of a rise since April, because in a lot of ways, people are taking that stimulus check that they got, and they're investing it in the stock market. So you end up seeing inflation through the additional introduction of money supply into the economy, but you're seeing inflation in asset prices in this regard through the stock market. So with Robinhood, Robinhood's kind of made this easy on people. It's free. It's easy and it's free, and it's kind of leveled the playing field for the average Joe and Jane. Is that really the case though? So let's keep on reading. So it says, via news and social media, trading has become the talk of the town. The ease of access, low cost, and large moves of many stocks since March have been key drivers. Let's see. The line between institutional and retail continues to blur, and reality certainly has shown their ability to move markets. So like we mentioned before, retail investing has seen a surge in activity since March. And you can see that here in this graph where we track the S&P, the Asian Pacific Index, and the European Index as well, all going up since the about the middle of March, so to speak. It says here, the pandemic has kept millions at home, just as low-fee trading platforms have spread from America to the rest of the world. Low-fee trading platforms such as Robinhood. So it begs the question, if it's free to use, free commissions, very few fees, if any. We've mentioned Robinhood Gold, but that's not a product of necessity, really. So what's the catch? What's the value? How is Robinhood actually making money? So, upon further investigation, we find out that, Robinhood is actually not searching. When you make a trade on Robinhood, it's not actually searching for the best price for that stock. In reality, it's actually selling that data off to high frequency trading firms, which then leverage that data and they execute the trade for you, but they leverage that data to best understand retail money behavior. And plus, at the same time, Robinhood is actually built on infrastructure that's leveraged by a number of other places like Seeking Alpha, not bashing on Seeking Alpha, but it's just the truth of the matter, but where you get delayed stock quotes. You're not able to get the best information possible to make the best decisions possible. You're getting delayed information. So, you kind of get what you pay for or what you don't pay for in that regard. So it says here the zero fees are especially beneficial to day traders or scalpers whose participation in the markets are now virtually free, again, for a reason. The super nimble and sophisticated day traders still have a field day, said Margaret Yang, a strategist at Daily FX, but there's no free lunch in this world. Higher return is positively correlated to higher risk. Again, this kind of goes back to, a lot of these crazy movements in the stock market, that tend to originate from Robinhood. For example, bankrupt Hertz stock that was seemingly resurrected from the dead, albeit bankrupt stock. Kodak just a couple of weeks ago. Kodak isn't bankrupt, but still we saw a massive rally up, far above what it was actually worth. I always hearken back to what people like Jim Rogers have said. Always ask yourselves the question: is it cheap or is it expensive? Whether it be a stock, whether it be a home, whether it be a commercial real estate property, anything. The stock market, on the other hand, we're not really asking these questions, especially when you look at stocks like Tesla. We're not evaluating these stocks on a pertaining to the question of whether they're cheap or expensive. We're looking at them forward looking, which basically means we're looking at them from what are they going to be worth in the future. So two different things. It's not really investing if your entire thesis is made up of speculation that may or may not occur in the future, right? It's more so gambling, if anything else. It's like Max Kaiser says, it's the casino gulag. The stock market has essentially just turned into one big casino, as people are just stuck at home with all this extra free time. So we take all this money that we've been, if we do have jobs, any additional money we just put into the stock market and gamble it away. And there's also people that, that were once fantasies, in this fantasy sports world, in this sports gambling market. Sports are back now, but obviously there's a portion of time where it wasn't, and that energy had to go somewhere. Could it have gone into the stock market? Possibly so. So, just to kind of wrap it all up, there's a difference between investing and trading. If you're looking to get rid of an asset or a stock or an equity, a piece, anything within the span of a week or two or less, that's trading. But when you're anticipating a much larger time horizon, say, you find an energy stock, say in uranium. Uranium's been dead and unwanted for a decade now. That's the perfect stock. I mean, that's the perfect equity or sector to go into. When it's not loved, when it's unwanted, that way you have so much upside because barely anyone's in it. Any sort of interest generated, you're going to make many folds your return. Whereas the downside, sure, there's downside, but the downside is much lower than your upside. So this is what's called asymmetry. There's another aspect to investing that I also consider, and that's also that I consider to be intrinsic to investing as opposed to day trading, and that's dividend yielding stocks and anything that pays you to own it. For example, in real estate, it's cash flow from rental properties. Whereas with a lot of these speculative trades, it's not paying you to own it. It can go down to zero or it can go to the moon. Who knows? But it's just akin to going to a casino. So that's it. That's it for today. Thank you for tuning in.